Hello and welcome to this week's episode for SPY Trader Now. Today is March 25th, 2023, and our model portfolio is up 4.94% year to date. We are 100% in cash. We made one trade during the week, and we will show you that trade later on in the presentation. The SPY buy and hold investor is up 3.35%. So we are beating the returns of the buy and hold investor, which is our goal here at SPY Trader Now. Here are some past results going back for the last 3 years, and each year how we beat the returns of the buy and hold investor. If you want to see how I do this, go ahead and hit that subscribe button, ring that bell to be notified, and hit that like button to help me promote this video. Here at SPY Trader Now, we buy, sell, and trade the S&P 500. Here is a 1-year chart for the S&P 500, and we are going to go through the charts in much greater detail later on in this presentation. This is the last trade that I made during the week, which was on the 20th. And it was a cash secured put where we got a premium of $4.79. Last week, the S&P 500 gained 1.48% for the week. Here is the trade that I sent out on March 20th at 7:27 a.m. Pacific Standard Time. And here is the exact trade that we executed. Here is all the trades that I made for 2023. And the last trade was on this highlighted line item. We did 2 contracts and we got a premium of $956 for that contract, for those 2 contracts. Here is our equity curve for 2023 of our model portfolio for SPY Trader Now. And you can see over the last 2 weeks, we've done really well. Here is the equity curve for the S&P 500 buy and hold investor for 2023. And here is the 2 equity curves of both portfolios together, so you can see them compared side by side. And you can see how our model portfolio is beating the buy and hold portfolio by a small percentage, but still beating the buy and hold investor. And you can also see how our model portfolio has had a much better equity curve compared to the equity curve of the buy and hold investor, where it's gone up and shot back down. So we've been a lot more stable. Last week, on March 2nd, the Fed chair, Jerome Powell, increased interest rates by 25 basis points, bringing the federal funds rate to 4.75 to 5%. CNBC has the terminal rate for 2023 pegged at 5 to 5.25%. So we are almost there. The Fed is forecasting just 1 more rate hike this year. The announcement for the next Fed meeting will be on May 3rd, and the expectation is that Fed Chair Jerome Powell will have a 25 basis point increase during that announcement. Now we are looking at things from a bond market outlook. The bond market is telling us to not be invested in the stock market. We should be out of the stock market because we have an inverted yield curve, meaning that the longer term treasury rates are at a lower percentage rate than the shorter term 3-month and 2-year yields. And we have a rising interest rate. All these things combined are telling us that the bond market is telling us that we should not be long equities during this time. Here is a valuation of how the S&P 500 is. Currently, according to this website, at this link, I'll leave a link down below so you can explore this on your own. They are telling us that the S&P 500 is currently overvalued 37.1% above the modern era market average, which is 20.2. Currently, we're at 27.7. And here it is in a chart basis. And you can see that we are at the +1 standard deviation. So there's a lot of room to fall for this market to come down and us to lose money. So we want to be very cautious. The easy money to be made is when you're at the -1 or below the -1, and then you want to go long, and then you want to get that long equity curve going up this way, and like this one from here to here. That is the easy money to be made. Right now, this is not easy money to be made. Here is the Fear and Greed Index, and we are currently at 33. And Warren Buffett, the sage of Wall Street, whose famous quote, "Be fearful when others are greedy, be greedy when others are fearful." So, according to the Warren Buffett strategy, we should be going along in this market. Now we are looking at things from a seasonality outlook. Going back for the last 20 years, the S&P 500 has closed higher in the month of March 70% of the time. For the current month of March 2023, we are up 0.25%. So technically we are meeting that goal of being higher than when we opened, but 0.25% is basically nothing. So going long right now at this juncture in time frame from a seasonality standpoint is prudent, and the odds are 70% in our favor that we're going to have a profitable outcome by going long right now. Now we are looking at things from a very long-term outlook, because this chart of the S&P 500 monthly chart is going back 20 years. We were in this downward trading channel. We are trying to break out, and we are right on the line. We have a bullish stance as long as we stay above this line. This is the line that we need to stay above. If we cross below that line and we come back down here, we really don't want to be long investors during that time frame. The MACD has closed its gap between itself and the signal line, which is bullish, meaning that this is going to have a higher probability of going up. And the histogram is showing signs that it is wanting to go up as well. The slow stochastics has come down, bounced off of its signal line, and you can see that the distance between the slow stochastics and the signal line, the gap is increasing. Well, that's good news, because that means that this market is going to go north from here. So we want to be long, looking at it from a long-term outlook. Here is an intermediate term outlook, because it's weekly chart going back 5 years for the S&P 500. And it is so congested in this area between all the moving averages and with the candlesticks that it's very difficult to see exactly what's happening. So we look here in the thumbnail to get a better idea of what the market is doing. And we look down here at the MACD and the slow stochastics. Right now, the MACD looked like it was going to cross and go below its signal line, but if you see, it has actually gone parallel to the signal line. And we're right at the 0 mark. So there's plenty of room for the MACD to go this way and make money going long, or this way and make money but going short. So we are watching this closely. The slow stochastics is already below its signal line and heading towards the 20, but we're holding at this 390 level. We are currently at 395.75, so we're above this support line of 390. As long as we stay above that, we are in good shape to go long. We truly appear to be stuck in a trading range right now. Here is a short-term outlook with a 1-year daily chart, so each candlestick represents 1 day's worth of action. Here's that last trade that we made, which was on this candlestick right here, and then it expired on Friday, which is this last candlestick right here. So the trade that we made was on this candlestick on the 20th, and then here it expired on the 24th, on the last trading day, Friday. The MACD is looking promising on this time frame. Slow stochastics is rolling over. Now we are looking at it on a 6-month chart, daily chart, so we can see the candles a little bit better. we are trading inside of this downward megaphone pattern, and we are at the upper end of this megaphone pattern right now. The probabilities seems like we're stuck in a trading range, and we're just going to bounce around here and kind of drift this way until something else happens. The MACD is positive and the slow stochastics is just beginning to roll over. Now we're looking at the VIX, or the volatility index, or the fear index, and risk is dropping. This is, if you look at the last week's action, it is extremely volatile. The market was all over the place, telling you that there's a lot of confusion in the market. The market doesn't know what direction to go into. And that is when you start seeing candlesticks like this. But overall, things are softening and coming down. So the risk in the market is dropping. So if the risk is dropping, we want to be long equities, because when the volatility index goes down, that's when you make money in the stock market being long. When the volatility index goes up like this, that is when you want to be in the sidelines in cash or be short the market to make money. So right now it looks like it's coming down, and it's going to come back down to below 20. That's my interpretation of how I'm reading this chart. Oh, and then looking at it from Warren Buffett's famous quote, you want to be greedy when others are fearful. That's why I put in sell and buy the S&P 500. When the fear is getting up here, that's when you want to be greedy and you want to go long. When there's more greed in the market, that's when you want to be fearful and you want to be more cognizant of selling the S&P 500 when you're at these lower levels. Now we are looking at it on the Think or Swim TD Ameritrade's platform, where I've put in here standard deviations. So it's the S&P 500 1-year daily chart. Each candlestick represents 1 day, and this is the -1 and +1 standard deviation, +2 and -2 standard deviation, and this dashed green line is the regression line right at the midway point. We are just above the regression line, and we are just above the 200-day black solid line moving average here. The 50-day line is this green line right here. So we're trading right now between the 50 and the 200. So we're going to be bouncing around here until we break out. This is the same chart, but instead of going back 1 year, it's only going back 3 months. You could see that when we tagged the -2 standard deviation on this 3-month chart, it was the perfect time to be going long the market, because it bounced. That was the low point right there at the -2 standard deviation, and then it bounced from there. But now we appear to be going more sideways, and that is what I'm expecting right now. Sideways action until this market shows some other action. So what do we do with all that information that we just went through for this presentation? Well, as of March 25th, 2023, market summation according to SPY Trader Now, the market is showing signs of stabilization, and it's stuck in a trading range until it breaks out. For us to make money in this environment, we will sell option premium in the form of either a cash secured put or a covered call. On Monday, after the market opens, I'll see which one looks better for the return on investment, and I'll take a trade. I hope you have gotten some valuable information out of this video. If you have not done so already, go ahead and hit that subscribe button, ring that bell to be notified, and smash that like button down for me right now. I thank you, and I wish you good trading.